Welcome to the Deep Dive. Today, we're looking into really one of the more surprising business shifts we've seen lately. Just imagine a company, right, not too long ago, known mostly as a Bitcoin miner. Basically a huge energy user, really just gobbling up electricity like a teenager at an all-you-can-eat buffet.
Oh.
But then things changed pretty dramatically. Fast forward to 2025, and this same company, it's like it shed its old skin. It's something totally different and, well, for a lot of savvy investors, way more interesting.
Yeah, it's a fascinating pivot, and the stakes here are just enormous. We are talking about Core Scientific. And our sources, the material we've dug into, they really seem to show why smart money, the kind that isn't just chasing hype, is quietly moving into this company right now.
Okay, so our mission for you today is to get beyond just what happened. We want to understand why this whole shift is so important for the future of AI. And maybe crucially, where the real, lasting value is. Because this isn't just, another tech company changing direction. It feels bigger. It seems to be about owning what might be the most valuable real estate of the future. These high-power, AI-ready data centers. So let's unpack this story.
Right. So Core Scientific, in its past life, it was all about Bitcoin mining. And what's interesting looking back is that these crypto miners, maybe before almost anyone else, they really got something fundamental. They understood that power was the true currency. They weren't just throwing up warehouses. They were building these really sophisticated power delivery ecosystems designed specifically to pump megawatts, huge amounts of electricity, right into their mining rigs.
And that infrastructure, that focus on power, it turned out to be critical, didn't it? Especially when the Bitcoin halving hit in 2024, because mining revenue just tanked, margins collapsed, and Core Scientific's adjusted EBITDA, that's a measure of core profit, it actually went negative in the first quarter of 2025. For a lot of people, that probably looked like game over for that model.
Yeah.
But it seems like in that downturn, Core Scientific didn't just see a problem, they saw, a new path forward.
Exactly. What looked like a crisis was actually the trigger, the catalyst for this big strategic shift. By early 2025, they were already moving. They started offering what they call high-performance colocation services, which basically means they began renting out that power capacity, that infrastructure they'd already built, to AI companies. And that's just a totally different world from the speculation around Bitcoin, isn't it? The demand for AI compute is just on this exponential trajectory. So for investors looking long-term, that shift is obviously very, very appealing.
Right. And those initial numbers you mentioned, the colocation revenue, Q1 2025, only $8.6 million. Seems tiny. But it was the start. It was growing. And when I see that, I kind of think about, Amazon Web Services way back in the beginning. Tiny, almost ignored, and then boom, it completely transforms the company.
Yeah.
So what were those sharp investors seeing beyond just that small starting revenue?
Well, I think you nailed it with the AWS comparison, potentially. They saw the underlying asset, the infrastructure optionality. And this gets us to the whole power play idea. So much of the AI hype focuses on the chips, right?
Yeah.
NVIDIA's GPUs, AMD's stuff. But here's the kind of dirty secret. Without enough electricity and the cooling to go with it to actually run those chips, there's really expensive paperweights.
Yeah.
That's the bottleneck. That's the constraint everyone's running up against.
So Core Scientific, almost by accident it seems, built exactly what AI needed next. Their old facility, the one set up for those specialized Bitcoin ASIC rigs.
Yeah, application-specific integrated circuits.
Right, those are now what perfectly suited for the high-density GPU clusters that AI relies on. They already had the big stuff, the transformers, the cooling, the connections to the power grid. Is converting those old mining sites really that much easier than just starting a new data center build from scratch?
Oh, significantly easier. Far easier than starting from scratch is what the sources suggest. I mean, think about it. These AI training clusters, they need staggering amounts of power. We're talking as much power as small towns.
Right.
The scale is just immense, and it's growing like crazy. So Core Scientific's existing footprint, that infrastructure optionality, hundreds of megawatts already installed, plus the ability to add more, that's a huge advantage. It's a real moat around their business.
Right.
While everyone else is fighting for land, permits, grid hookups, building takes years, Core Scientific is already sitting on that crucial power foundation.
Okay, so the pivot itself was a big story. But then came the bombshell announcement. Core Scientific getting acquired by CoreWeave. Maybe just quickly remind us, who exactly is CoreWeave and what were the deal terms?
Sure. CoreWeave is known as an AI hyperscaler. Basically, they provide the specialized high-performance computing infrastructure that AI development needs. They've got really deep ties with NVIDIA, and their client list includes major players like OpenAI. The deal itself was all stock, valued around $9 billion at the announcement. Core Scientific shareholders would get 0.1235 CoreWeave shares for each CORZ share they held, which put the value at about $20.40 per share.
Yeah, I remember that news. And the initial reaction wasn't great, was it? Core Scientific stock dropped, like nearly 20%. A lot of retail investors were pretty upset, saying it was undervalued, crying foul. So on the surface, it looked maybe a bit controversial. But you're saying the institutional money, the so-called smart money, they saw something completely different. What was their take?
That's right. The immediate market flicker was negative, which, if you're just watching the ticker, maybe that makes sense. But the institutional folks, they understood this wasn't just CoreWeave buying some buildings. This was about CoreWeave locking down the power supply that fuels its AI empire, securing its growth path. It's about controlling that critical resource, not just leasing space here and there.
Ah, okay. So it's about control. And that leads to what you called strategic dominance. Because together, the combined company controls, 1.3 gigawatts of power, with plans to go beyond 2 gigawatts.
Yeah, massive scale. It's not just adding capacity, it's consolidating control over a scarce resource.
Okay, that makes sense. And that's why the smart money is betting big here. You mentioned 3 key reasons.
Exactly. 3 main drivers seem to be at play for these investors. First, vertical integration pays off. Simple as that. By owning the data centers and, crucially, the power infrastructure, instead of just leasing, CoreWeave can, slash costs, boost margins, and control its own destiny. There are projections out there suggesting over $500 million, $500 million in annual cost savings by 2027 just from this integration.
Wow, $500 million a year by 2027. That's significant. Okay, what's the second reason?
Second, power becomes the bottleneck. We touched on this, but it's critical. AI workloads, the demand for training and running these models, it's just exploding faster than new data centers can be built. And often the real holdup isn't getting chips, it's securing the sheer amount of power and cooling needed. So owning these power-rich facilities today, it's very much like owning oil fields during an energy boom. It's the essential commodity.
Got it. The essential commodity. And the third reason, you mentioned undervalued infrastructure.
Right. This ties back to the initial stock reaction. The market, or at least parts of it, was still pricing Core Scientific like it was just a legacy crypto miner. But the smart money saw through that. They recognized what it was becoming. Essentially, an AI infrastructure REIT in disguise, a real estate play focused on AI power. They saw assets, the land, the grid connections, the power capacity, worth potentially far more than the pre-acquisition share price reflected. It was a mispricing opportunity, basically.
Okay, that framework makes a lot of sense. But look, no deal this big is ever a sure thing. There have to be risks, right? What are the potential hurdles here?
Oh, absolutely. You always have to look at the risks. Transparency is key. For one, the deal technically hasn't closed yet. There's always a chance, however small, of regulatory issues or maybe even a shareholder pushback, though that seems less likely now. Then there's the integration itself. Merging 2 big operations is complex. CoreWeave needs to actually deliver on those promised synergies while managing massive growth. That's a huge operational lift. You also have things like potential insider lockup expirations down the line, periods when insiders can sell shares, which could put temporary pressure on the price. And, while it seems really unlikely right now, there's always the distant possibility that AI demand could somehow slow down unexpectedly.
Right, always risks. But stepping back again, thinking about the bigger picture, the real insight here seems to be less about this specific deal, maybe, and more about understanding where the real long-term value in AI lies for people trying to figure this space out. You're saying chips and models change fast, but some things are more permanent?
Exactly. That's the core takeaway, I think. Models evolve, algorithms get better, new chips come out every year or two. That cycle is incredibly fast. But power and real estate are enduring. They are the physical foundation. Owning the physical layer of the AI stack where electrons meet silicon is a bet that pays for decades. It's less about picking the winning model and more about owning the infrastructure that runs all the models.
So Core Scientific plus CoreWeave, this combination becomes this vertically integrated powerhouse. They can offer AI clients something few others can. Massive scale, delivered fast, with fewer constraints. And the investors getting in now, they're not just thinking about the next earnings report, they're playing for the next decade.
Absolutely. So let's just recap the core insights for you listening. Core Scientific had built this critical power infrastructure that AI desperately needs. CoreWeave's acquisition locks that down, giving them a huge strategic advantage through vertical integration. And it seems the market, initially at least, didn't fully grasp the value of those underlying assets, pricing it based on its past, not its future.
It makes a whole situation, for those who can, handle the ups and downs, a really interesting asymmetric bet. If this merger goes through as planned, and if AI demand keeps soaring like it is, well, this combined company really could become the go-to provider of AI compute capacity.
Which leads to a final thought, maybe something for you to chew on. Given that we're seeing power and real estate emerge as these major bottlenecks for AI's growth, what other kinds of, traditionally unsexy or overlooked physical infrastructure might become the next critical frontier for tech disruption and investment? How does thinking about that physical layer change how you view the whole AI boom?
Something to think about. What's the next foundational piece? Because for now, Core Scientific has gone from being just a miner to effectively being the landlord of the AI revolution. Thanks for joining us for this deep dive.